insight to the world of insurance only on ET Now. In today's Leadership Insight segment, we'll focus on insurance distribution cost, insurance commission, and other issues impacting insurance industry. To talk on this, I'm joined by very special guest, Sandeep Dadia, CEO of Lockton India. Thank you so much, Sandeep ji, for joining our Insurance Mantra.
Thank you, Anurag, for inviting.
Sir, to begin with, I just want to ask about the whole issue going on insurance distribution cost, insurance commission. So, according to you, what's the right approach, a balanced approach can be adopted? So, regulator is also happy, companies are also happy, and policyholders are also happy.
So, I think regulator had introduced expense of management as a as a cap. It was 30%. Which includes insurance companies' various costs, right from their salaries to their management to their IT system, etc. Basically, any cost other than claims. And also intermediary commission. This 30% is a very matured concept. Countries like USA, Canada, UK, France, Germany, Australia, Singapore, South Korea, all of them are using this. There is nowhere in the world I have not heard of that there is some kind of a cap. They are all working on expense of management. See, because there is a transaction between insurance company and broker and client. No insurance company would pay anything extra beyond a point to a broker if he is not adding value.
Okay.
Second thing, it's a variable cost structure for an insurance company. When a broker closes a deal, then only he gets the insurance
So there are talks going on that we see that additional caps or overall EOM limit may get reduced. So what impact that may also have?
So it will definitely reduce the commission structure. It will impact the services given by a broker or an agent or all. But to understand very in detail, we should go a little more into detail as to what are the types of intermediaries available. We have brokers, we have agents, we have corporate agents, we have banks. We have IMFs. There are multiple, and in broker itself, there are multiple models available. So basically, there are commercial lines brokers, or there are PNC brokers, liability, health brokers, or there are aggregators, online aggregators. There are POSP channels. There are MSP brokers. There are multiple brokers, and each have their own different process. Each have their own different investment pattern. If you see after EOM introduction, expense of management introduction in India, lot of interest has come in. New reinsurers have come to the market in GIFT City. MGA regulation will attract furthermore development of market. Then new private equity firms have entered India. New multinational brokers have entered India. Because they have seen now India is breathing the same language which is actually talked by the industry worldwide.
Okay.
So, and putting any cap on that, my personal feeling is may not be very productive.
Do you think, sir, that much intervention or that much regulatory supervision is required also because what are the global practices? Because we have seen in India from finance ministry to RBI to IRDA, everyone is worried about the distribution and commission structure.
So I personally feel, first of all, I've read multiple articles like you. I don't have a direct information, but what I hear and see and read in the market nowadays, so insurance product is being compared to other financial product. I would like to clarify here that insurance broker's role almost begins after the policy is sold. Only 30% of the job is done once the policy is sold. The remaining is entire policy servicing for the entire year. Policy, claims, endorsements. I'll not go into the technical details. But on the other side, any other financial intermediary, their role does not remain so active after besides relationship management. And so it's a very complex subject, insurance as a subject. Second thing, insurance is a contract which is made up of 10-20 pages, and so many times we realize that people are talking about misselling. Most of the customers do not read the contract. Probably they don't have the ability or understanding of reading the contract. But misselling is definitely, it should be solved and resolved. Anyhow, I do agree and appreciate that.
So what's your view on some misselling in insurance industry? Because recently misselling is also talk of insurance sector. RBI came up with guidelines, although it's not related to insurance only, overall financial product sold through banks. So what's your view on?
See, my personal belief is that mis-selling has to be divided into 4 parts. One is the misselling, where there is a deliberate intention of a broker or an intermediary or an insurer to sell something which is not actually the right product. So that is a misselling, which is wrong. It should be stopped anyhow, it should be punished. However, there is also something called as missed selling. And what is a missed selling? Somebody who tries and sells the product without knowledge. So he doesn't know. So there is a knowledge gap. Third thing what needs to be understood is misbuying. So what is a misbuying? And the fourth is missed buying. Misbuying is all about, I've bought something for the local language. I bought a health insurance product which is covering hospitalization, and I expect my OPD also will be covered, which is wrong. So that is a misbuying. And fourth is a missed buying. Many a times we recommend the customers to buy a risk cover or a product, but they don't buy it. So that is missed buying. So whenever there is a grievances, claim not being settled, one must classify into all these four buckets and then analyze, is it actually a missed selling, misselling, misbuying or missed buying, which is very, very important.
Missed and missed buying or misbuying?
Misselling, missed selling, misbuying and missed buying.
Okay.
And it is very important because currently everything is being classified as misselling.
Okay. And sir, the government has also introduced MGA. So how MGA will change the distribution, and role of brokers will also change after the MGA?
So many brokers will opt for MGA, I'm sure. See, when a sales is outsourced, I'm giving a very simple language of explanation. When sales is outsourced, we call it as agency or broking or bank assurance or, POSP or etc. When underwriting is outsourced, that is an underwriting pen and authority given to somebody, which is called as an MGA.
So it's a kind of mini insurance company.
I would not call it as an insurance company because they don't have a capital, but they have the underwriting authority. So in insurance companies gamut, one is the sales part, second is underwriting, and third is all the about other roles. I'm talking about the key role, underwriting as well as sales. When both are outsourced, underwriting will be called as MGA.
In between insurance company and distributor and agent.
It reduces the cost of an insurance company.
Okay.
And once there are multiple underwriting partners, insurance companies' fixed cost goes down. And globally, if you go to see, that is how most of the insurance have become profitable.
Okay.
You go to a Lloyd's market, as a customer, you'll not get an entry. You have to be a broker.
Yeah.
And that too a broker registered with Lloyd's. That's one of the most matured markets of the world.
Okay. And sir, you just spoke about the reduction of cost for insurance company, and we see that companies are focusing a lot on technology front also. So how technology will change reduction of cost for insurance companies, for eventually it will turn to policyholders also?
Yeah, absolutely. So see, gone are the days, a decade back, when we used to say that, if there is a technological upgradation, the cost goes down. But now any upgradation is costing huge amount of money because that technology becomes outdated in 3 to 5 years. So we have to further invest. So those costs are never going to get amortized. Second option is for the brokers like us. Now we have one choice and we have to make a choice. Either we are going to disrupt the industry or we are going to get disrupted. We make the first choice. We will try and disrupt. Not to destroy anyone, but to increase our processes. Because if we don't do it, somebody else is going to do it. So technology will change the way the brokers and insurers are working. And there is a lot of duplication of work which is happening between brokers and insurers. So that has the biggest advantage and potential to get merged into a single
duplication of work between
brokers and insurers.
Okay.
See, client gives the data, broker sends that data to the insurance company. Now, there are three words I just mentioned, the seamless flow of data. There are a lot of steps between them. So, once we get the data, it takes nearly few days for us to make an RFQ. And imagine brokers, average I'm talking about, broker success ratio of converting, call into sales and getting RFQ is just 5%. Average I'm talking about. Now they going to insurance companies. They send 10 insurance companies different quotes. Insurance companies send us those replies. What has been asked, they agree, they disagree, whatever. We send it to the client multiple to and fro. So each client would require nearly 15, 20 types of transactions. Now imagine if there is any mistake, any failure, and there is a duplication of work. Today, insurance companies are also very happy the kind of data they are getting from the market through brokers. So that professionalism has to be built in, and that overlapping of the business has to go away.
Okay.
And technology will bring that.
Okay, sir. So your final words on insurance commission and EOM, what you would like to have personally?
EOM. I'm not saying, see, overall average broker's commission is not more than 10 to 12%. I mean, I'm talking about an average. Some may be at 15, some may be at 5. I don't know. There are so many instances where broker is working on 2% also, and some are at a little higher. It all depends on the kind and quantum of work the broker is adding to the particular portfolio. So EOM is the right way to understand and make the judgment. Let there be a market force which decides. We cannot cap, this is my personal view, ideally capping anything into a product is going to become non-viable. If brokers don't make money, if agents don't make money, they'll further not invest into the system to grow the market. So I think India, and if there is anything which we don't know, which I'm not aware of, there is any very high commission payout happening anywhere, of course that needs to be curbed. But overall, EOM is a great concept. EOM whether 30% or 29% or 28%, that is debatable.
EOM is a great concept, and regulator can change EOM, but no sublimit is required.
I would personally say so.
Okay.
Having said that,
regulator can
I don't have the data which regulator has, so I can't say beyond a point.
Thank you so much, sir. Pleasure talking to you, and thank you for sharing your insights.
Thank you, Anurag, for inviting.
Okay. So now time for a short break. After the break, in Expert Speak segment, I'll be joined by former ED of LIC. Stay tuned.